Hi, everyone. Welcome back to The Big Picture. I am Joe Cruy at Paradigm alongside my co-host, Crypto Vol portfolio manager and Twitter sensation Marty, as well as Vol data guru Greg Magadini from Amber Data. Very excited to have Joshua Lim on the podcast today, who founded the crypto trading firm Arbelos. Joshua also has a really good crypto Twitter profile. We'll put his handle down in the description below. Make sure to give him a follow as well. But before we begin, if you liked our content so far, hit that like, consider subscribing to us as we continue to deliver you some of the best content in crypto derivatives. Well, Joshua, thanks for coming on, man.
I'm really glad to be here. I've always wanted to be part of this podcast and talk to you guys. I'm happy to sort of share any insights I've got about the vol markets with you guys.
Awesome. So to start, if you can kind of just give us a quick intro around how you got into crypto and what you're doing over at Arbelos now.
Yeah, for sure. Well, I think from those of the, your listeners that might know me, I've been in a lot of different seats in crypto over the years. I've seen a couple of different cycles. I started way back in the day in 2014. And I worked at Circle, kind of helped stand up like a trading business there. And since then have kind of subsequently moved on to a couple of different institutional sell side type of businesses. So basically providing services and access to funds and corporates and treasuries and anyone that kind of would like to access the derivatives and vol market for crypto. Over the years, kind of seen like a pretty dramatic change in the nature of the asset class, right? The evolution of it from being a more retail-driven asset class to one that's dominated now by institutions, the ones that are creating ETFs and enabling more broad market access to it. I think over the years, like I worked at Galaxy just to get that kind of vol and trading business started there. And then I started the desk at Genesis as well in 2020. And along the way, the needs of market participants has changed a lot. It's become more sophisticated, looking for kind of ways to express technical views and options with defined sort of risk profiles. Or structured products, and then there's sort of the constant hunt for yield in crypto that's moved a lot of demand away from lending products to more derivative type products. So have been fortunate to be kind of in the epicenter of a lot of that. Really excited to see like some of the more recent developments that have been happening. Like this is a very exciting time, as you know, with the ETF that just launched. It's going to create a lot more demand for institutional market participants, but also retail. They'll have more access, and there's obviously going to be an options market and things like that around the ETF. And then just overnight, obviously, you guys probably saw the overrider come back in, and it's having a pretty dramatic impact on vols there. So
yeah, he was waiting for the vols. I was joking. He was waiting for the vols to come back to 40. The 60 was too high.
Exactly. Yeah. And that's like one thing I've noticed about crypto, just like it is so one-sided and sort of reflexive, where it's so hard to like have a point of stability where people are, have like pretty healthy two-way flow. It's all pretty much like buyers only or sellers only. But yeah, I guess that's why Paradigm exists. You're a good platform to kind of like match that demand. But yeah, anyway, Arbelos, I started Arbelos kind of in the depths of the bear market. This was kind of like tail end of last year. Our goal was to really fill a gap, thinking through what happened in the last cycle, especially 22 with the sort of broad credit contraction and just a lot of defaults happening throughout the space. It became pretty clear to me and my co-founder, who's a guy, probably some of your listeners know as well, Shilling Tang, who used to run Ledger Prime. It became pretty clear to us there's like an opening in the market for a new type of trading firm that's pretty focused on transparency and providing just sort of real-time visibility into how we operate as a firm to our counterparties so that they have more faith in us bilaterally, to trade with us bilaterally. So we've stood this up, we've done a healthy, like 10 digits of USD notional so far in this sort of like bilateral OTC space. We're pretty active in basically the three verticals, like what we think of as the vol market. There's the bilateral space, there's the sort of on-exchange listed markets, Deribit, CME, and there's a new and emerging category of DeFi protocols that are servicing both retail and institutional market participants in on-chain order books. And so we've been building a tech stack that can really support all of that, and recycle risk and sort of place, like that idea of having a network of people so that you can place this very much reflexive type of flow in crypto and try to figure out the right home for, different risk profiles. That's kind of what we think is our edge. And we're really excited to kind of come back to the market and talk to a lot of the old counterparties that we used to do business with.
Yeah, I have to ask. So, given the credit crunch that we had last year, right? I mean, in 2022 now, and kind of in the aftermath of that, we heard a lot of our market makers and takers kind of like scared to face off with one another in, the bilateral OTC space. And obviously, you're a crypto vol OG, very well known, have a great pedigree in the space, as well as Shaleng. But like, how do you guys kind of get over that line where it's like, look, we're new, but like if you face off against us, you're good. If you're able to answer.
Yeah. I mean, it's a very hard problem, and it's different in crypto than it is in TradFi, right? In TradFi, you have decades of scaffolding, right? Like you've got legal structures and regulatory structures that enforce trust between counterparties and capital requirements and reporting requirements, like that. And you also have the bulk, like kind of this set of service providers that is already kind of enabled auditors and legal, sort of counsel and stuff like that can help you structure deals in the right way. And I think a lot of that didn't really exist in the last cycle, and it wasn't. I think it was. We fell victim as an industry to our own rapid success and growth, right? Where we started off, building these sort of trading businesses, and a lot of it was sort of prop or OTC businesses, and they actually all became sort of these global franchises, right? And if you think about the evolution of the banking system in the U.S., like especially sort of investment banks through Glass-Steagall and, like through the 2009 crisis and all that kind of stuff, like we sort of relived all of that in crypto in one very short cycle. And we sort of all learned the lessons of the things that have been happening in TradFi for many, many decades, all in about the span of a year. So that's kind of what happened, right? We all just kind of grew up too fast. And I think we all took away different lessons. And the biggest lesson for us is, we believe in being open and transparent about our balance sheet to our key counterparties, and giving them transparency using verifiable means. So to the extent that we can share information that is verifiable through third-party APIs or through, even more sophisticated on-chain mechanisms, like you prove that you have assets on-chain. We've already seen a lot of these developments emerge and service providers emerge around this in the off-exchange custody space, right? Like, you've got like your Coppers and your Fireblocks, and they're all kind of offering access to markets. And you also have the evolution of like, I guess what I would consider like true primes, like Hidden Road and FalconX, like these types of shops that can come in and provide access to all kinds of markets and all kinds of liquidity providers in one place, where you're sort of getting a little bit of capital efficiency by netting across all different venues. So it's happening, and it's just like there needs to be dealers and liquidity providers and principal balance sheets that can slot into that in some way. So that's where we think our edge is, that being that balance sheet and being able to price things correctly and being able to lay off and sort of distribute risk across our network pretty efficiently.
Cool. That's super helpful. I think now we'll have Greg kind of go through, some of his slides that, he does every couple of weeks or so. It'll be kind of cool to see how, things have changed, quite dramatically, obviously, since the ETF approval and that getting listed. So let me share my screen quickly and we can get into that.
Yeah, before jumping into that real quick, I
Go ahead, man.
just want to chat on Arbelos a little bit more. So one of the things
Hey,
that's super interesting about your firm, Josh, is, at Genesis, you were the main OTC desk for everything vol. Shiliang was one of the main market makers on screens and on DeFi platforms. So you kind of have like this junction of essentially covering the two main venues, and now we have sort of the TradFi venue coming on board. So this is like a new entry of institutional players. That's like a new source of opportunity. You guys are kind of in the middle of this junction where now you can. There's going to be some spillover from the TradFi people. I'm sure. I would bet a lot of money on it coming in, and then you have the DeFi space that's kind of heating up, and then sort of the CeFi expertise. So, are you guys essentially going to be servicing all three sort of um, client pools? And then secondly, like what kind of assets under management does someone need to have to deal with you guys?
yeah. Well, we are going to address all of these different pools of liquidity, I think. And that is one of the reasons that there is a lot of opportunity in the derivative market in crypto, is because it's so fragmented and different market participants. There's obviously like an institutional set that can trade on CME or touch the ETF, but maybe less so the ability to trade on these offshore derivative venues. And then similarly with DeFi is sort of its own vertical standalone thing. There needs to be like principal players that can translate liquidity from one vertical to the other. So we are trying to touch all of those different areas. I think, yeah, to your point, right, there has been a big change in market structure with the dealer community. And I think, yeah, like the advantages now that a dealer might have that make them much more indispensable to their counterparties are like strength of balance sheet, just regulatory posture, and the ability to kind of like provide a broad range of services that covers the entirety of like our trading firms like risk needs. So it's a little bit of that, like being nimble, being creative, being able to structure ideas, and being able to express that, in the language of both finance and the sort of like crypto native technology protocol level. There's a bit of a disconnect between those two things as well, right? Especially now, where if you think about like what's happening in crypto with things like staking and restaking, security reapplication, things like things have been existed for a long time, like AMMs that have like embedded gamma into them. All of these things are essentially like financial engineering concepts that are being used by market participants that may not even know how to price that risk, right? Like the retail set. So there's a big opportunity to sort of get the pricing right, and build models to kind of capture some of those like pricing inefficiencies.
Yeah, fantastic.
I think there's a huge thing there, mending all three players together, right? You're going to have the institutional guys in the stage trading CME and these new ETF products, and specifically options on the new ETF products. Then you have people that can trade on these unregulated, semi-regulated derivatives exchange, offshore exchanges, depending on their jurisdictions. And then you also have the DeFi players. So you're always seeing everybody playing in their own sandbox and never coming together. So it'll be interesting to see how you guys mend that out and bring liquidity to all three.
Yeah, we'll see. I mean, it has to start with, like a strong technology foundation. And that was like, I think if you think back last cycle, a lot of the firms in the space ended up with just a ton of technical debt because of how quickly things evolved. You ended up sort of creating new products on the fly and sort of operating on the frontier of crypto, of whatever it was at the time, whether it was like NFTs or AMMs or auction vaults, whatever. And so, yeah, I think now that we've had a chance to catch our breath a little bit over the last year, the bear market, as people say, is the time to build. Yeah, I think the foundation is like you just need the right technology stack to address all these different verticals. And that for us, that starts with like a very good vol model and, being able to ingest all the data from different sources, and then eventually being able to sort of execute in an automated way. Yeah.
Awesome. On that note, I will share my screen.
Yep.
Yeah.
Cool. Take us away, Greg.
Cool. So just, obviously we had the approval of the Bitcoin ETF. We had a little fake out. So these two charts that I'm showing here are essentially sort of that week in that process and what we can see. So the top chart is Delta One futures. This is Binance Bitcoin perp. We can see liquidations and liquidation levels, and we can get a good idea of sort of the price action. And then the bottom chart is just going to be at the money volatility for consistent 7 days till expiration, 30, 60, 90, 180. So a couple of things that were really interesting to me, just kind of from a trading perspective. So when we had that fake out of the SEC gets hacked, and then we get a fake approval, and then that approval gets pulled back, to me, that was really interesting in terms of the market showing its hand. So you could see a good idea of like, how is the market going to react to this type of news? Even though that news was redacted pretty quickly, we do get a trading range. And then secondly, like over leveraged players theoretically get liquidated, and we can see sort of some of these liquidations occurring. So that's that first box on the left. And then we have the middle box, which is the actual announcement. So the actual announcement, again, pretty tight trading range, a lot less liquidations. So, you could see that some of the leverage is pulled out a little bit. And then what's really interesting is if you look at the bottom portion of the chart, the bottom chart, you can see the at the money vol. So one of the things that really stuck out to me was that we had about an hour period where vol didn't even react yet. So there's like it's unlike TradFi where things get priced very quickly, repriced very quickly on an announcement. Here, there was a nice period where you could actually just go ahead and sell that vol. Now that the announcement's out, we have a little bit of a trading range. And then the next 24 hours, we had sort of that pullback in vol.
Yeah, I mean, to that point, dude, like I had CNBC on during like that ETF approval when it was happening, and these anchors were still talking like as if the decision, if it was still being decided, and the decision was out for like an hour and a half. So like to your point, it kind of feels like due to the lack of media outlets and coverage, like you are able to take advantage of these inefficiencies. And if you kind of hear the news first, you can kind of take advantage in some cases.
Yeah. I also think that now that it's like more of a TradFi process, there are these like longer time lags, right? Like between the somebody selling an ETF intraday to the moment that the Bitcoin, leaves Coinbase custody and gets settled with LPs and stuff like that. That takes a while now. And so when people are used to kind of processing news when it hits like the Binance tape or when it hits the blockchain, and you kind of see them, but now it's all delayed, and there's these sort of like intermediaries that are holding balance sheet positions and stuff like that. And so it's just much harder. Like the market doesn't really know. And like you guys remember, there was before this ETF, like people were just scratching their heads like, is there actually going to be $2 to $4 billion of demand? And like, where are those coins actually going to come from, right? I mean, it turns out there's just also a lot of offsetting outflows that people probably didn't want to acknowledge that there was going to be so much, right, between like some of the legacy products like the futures ETFs and some of the trust products and stuff like that. But now it's become pretty clear. And so it took a couple of days for the market to adjust and sort of like sell the ball back to the market. And now you're seeing it kind of in full force. But yeah.
Makes sense.
Yeah, that's an interesting argument, because there's the argument to be made that like we want to see how the ETF actually trades, what kind of demand there is, and like that's going to be the true event, the vol event. But the thing that's still interesting to me there is that vol sold off between the start of trading and the announcement. So the market kind of like sold off at the wrong time. Like it kind of disvalidated both theories. We got the vol announcement, nothing happens, and then we sell before the market opens and we start seeing the ETF flows. And you can kind of see that little bump there on that third vertical line. You see a little vol bump around the open of trading in the first 2 days of ETF trading. And to Josh's point, like we saw a lot of flows and we saw a spot reaction, a delayed spot reaction as Grayscale had an unlock, some Bitcoin hits the tape, and we kind of get this reaction. I'm of the opinion that the markets are going to get a lot more efficient now that we have TradFi players who are well capitalized. My thesis is that everyone's still kind of a small player in the crypto space and the crypto vol space. So who has the capital to essentially warehouse a lot of risk and necessarily sell this type of vol on an event?
Yeah. Beyond the vols, I think the other thing that was pretty interesting, this dynamic going into the ETF was like the forward curve too, right? Like, especially with the timing end of year in December, where a lot of people had to like move collateral off exchanges and stuff like that. Like you guys saw there was like a massive spike in funding across the board, which got subsequently retraced like first week of Jan, right before the ETF. But I mean, that was almost as good a trading opportunity as some of the ball moves around the ETF.
100%. Actually, Joe, do you mind just jumping to the fifth slide just to jump
Sure.
to the forward curve discussion real quick? Because I think this is going to be a really interesting phenomenon going forward.
Wait,
One
hold on.
more. Oh, it's going to be the CME chart in white.
I also feel like a broken record. I was like the one sounding the alarm, like this is hopium, and prices kept grinding up, right? But vols were kind of just going up, steady going up. Price was grinding up, and I was like, "There's no way." Forwards are like 120 or something insane.
Yeah.
At the money was like over 100. I'm like, "There's no way that this is sustainable into this huge event." And on this show and in my newsletter, I had been sounding the alarm on the hopium there. So it's good to see everything flushed out, and now hopefully we can grow from here.
Yeah.
I mean, you have like Kathy Wood, coming on talking about 500K Bitcoin. You couldn't find anybody in the media
1 million.
Million. Sorry. You couldn't find
you
anybody.
underestimated.
Why are you so bearish?
That was the bear case, 500.
Exactly.
Yeah. When everybody thinks the same way in this market, that's normally when shit goes wrong, at least from a spot perspective. Anyhow, Greg, can you see that?
Yeah.
Cool.
Yeah, so this is really interesting. I'm curious to get your thoughts on this, Josh. So CME basis premium CME basis versus Deribit basis. This is going to be a 30-day basis. We see a premium on CME versus Deribit, and that was kind of consistent throughout the whole year. And then kind of the last tail end, as you spoke about, we kind of had this little inversion, but most of the year CME traded at a premium to Deribit. And I think there's a couple interesting theses here. One is CME is regulated, and so there's kind of like this counterparty risk premium that people are willing to pay. To me, I think the bigger one is, how do you sell the CME basis? I mean, that thing is a pain to margin and collateralize. Did you follow this throughout the year? Do you have any opinions on CME stuff?
Yeah. I mean, I think generally Deribit in normal market should trade below CME, right? Just because of the nature of the collateral. Like if you're constructing a basis trade, you post Bitcoin to Deribit and you sell perps or you sell forwards or futures. And that's like a hedged position. Whereas like with CME, you have to post dollars. And so you have to buy spot and then also post dollars. So it's like less capital efficient, which means like the spread has to be probably a tiny bit wider. Plus you had this whole like the ITO thing, right? Where there was whatever $2 billion of just rolling futures that was, needed to execute every month. And then I think all of that got magnified. So it's kind of like, I'm looking at this chart here. It kind of looks like this, the CME stayed pretty elevated relative to Deribit. And that makes sense to me because basically everyone was positioning ahead of this ETF using the instruments they had access to, which could have been things like Coinbase stock, equities, the minor equities, or CME futures. That was like what the TradFi guys could get access to. And then towards the tail end of the year, you had that explosion with Deribit. And that story, I think, was just that people had to do year-end audits and like move coins off exchange or close out positions or whatever. And so that drove the basis on Deribit much wider than CME. So
Yeah,
I don't know.
That makes a lot of sense. Super interesting. I don't know if you guys saw this. Yes, I think it was yesterday or 2 days ago. SIBO just launched its future. So SIBO bought ErisX. Now this SIBO digital offering has both spot and futures. So this is like one place that's well regulated for counterparty risk. Although I personally trust Deribit, but maybe TradFis don't. So now people can go to SIBO, essentially buy Bitcoin, sell the future against it, all in one venue. To me, we're going to see TradFi smash that basis. I think that's the thesis going forward. I think that's my thesis going forward. I think we could see the same thing in Vol as well. I don't know if you guys have thoughts on that or saw that at all.
I think it was a bit of a market consensus that like post ETF, the forward curve would compress a little bit because, you know, like you said, right, people would be rotating, let's say, away from futures or away from BITO to the spot ETF, but also that there was going to be so much like capital inflow from TradFi, and maybe at some point these ETFs are like marginable and all that kind of stuff. So there's like just more financing available, like dollar financing, which compresses the forward curve a little bit. So I don't know. But like, I think that a lot of people got hurt playing that thesis into this like huge basis widening into end of year. So I don't know. Yeah.
Yeah. Interesting. Do you mind going up one slide?
Yep. This one or back?
Back. Yeah. Sorry. Cool. So obviously Bitcoin versus ETH vol, that's been an interesting story. We saw 2023 Bitcoin vol exceed ETH vol. One of the big reasons for that was that ETH overrider. So now we're kind of flipping, you know, post ETF, we're kind of flipping the other way. I think there's probably an argument to be made that we're going to start to see Bitcoin overriding flows with these ETFs. Grayscale announced that they're going to launch a buy right ETF themselves. So that'll be kind of interesting to maybe counteract some of that ETH overrider flow, and we could see sort of a continuation in ETH premium over Bitcoin over the next, call it 12 months, something like that.
Yeah, but the problem is now this guy's back. Now that the vols are 40, and we're kind of like through this period of, I guess, ETF volatility. It kind of seems what happened is Deribit probably told them to pump the brakes ahead of this sort of, you know, ETF announcement if things could go crazy. I mean, look at ETH BTC in the past week, it's up 20%, right? Up to 0.06 now. So maybe now that, you know, we're kind of past this event, and of course, you know, we're going to still see how this plays out. Now this guy's coming back to re-engage the market, and you know, as Josh said, you know, this market is so reflexive. So I don't know. It depends how big these flows get again. Would be kind of my view on it.
Mm-hmm.
What do you guys think?
I think there was this like narrative in the market that like early 24 we would see some sort of like ETH versus Bitcoin revenge trade, like the sort of ETH BTC ratio resurgence. We kind of got it, like you said, right? Bounced pretty hard off. I think like 0.04 or 8, and now it's like closer to like 0.06. So yeah, it's come up a lot, and now like the focus is, you know, and it reminds me of like when people were worried about Solana overhang from the FTX liquidation. There's this focus on like, all right, now there's the supply from there's a bunch of the states that are also selling ETH now, like ETH, and now there's the overrider. So there's going to be this like tug of war, I think, between those two camps of like people who are really playing for some sort of ETH resurgence. And like, it's not just ETH, right? Like there's a bunch of ETH ecosystem plays that have really dramatically outperformed, like Lido and Maker and those types of names. So I do think like it will be a theme that will play out, especially going into the ETH ETF approvals, like in May, I think is the time frame. Yeah, it'll just take a while, especially I think probably Feb and March, where there's not a ton of catalysts, because I think those are even before the halving might take a hit with the supply, the bull supply.
Right.
You guys just need a new crypto Twitter narrative so everybody can pile in and pump it back up to 100 vol product. Because right now, yeah, but we're dead on the horizon until we get a new narrative.
Yeah, it's hard. You need like a couple 10% day moves or whatever.
Can you go forward too?
Yeah, cool.
So this is really interesting. So if you do want to get long ETH vol, this is how I personally would do it. So if you look at that bottom chart, this is showing put 25 delta put skew as a percentage of at the money vol. So we can see that put skew is very flat. It's it's never been this flat except for Q4 2020 / January 2021 rally. So the skew is, it's flat, so that 25 delta put is relatively cheap to at the money vol. And then B, the supply of vol selling is, out of the money call. So you're kind of like stepping aside from that huge overhang of supply. You're getting essentially some flat skew, and then you go along the underlying. And as Josh said, there's some ETH ecosystem plays you can make as well. So maybe you buy the ETH puts, and then you get long the high quality ERC20 token plays as sort of a portfolio ratio. To me, that seems kind of like the interesting way to go long ETH vol if you do believe the narrative that ETH vol should outperform Bitcoin vol. That's how I would do it anyways. It's kind of the opportunity I see right now.
Yeah. The one thing that I'm looking forward to observing is like, I think in that environment, before it was like September, October, end of last year, there was more like a spot vol kind of correlation regime. I guess like even going into the ETF, people were using options, like call options basically for delta exposure. So you had like spot up, vol up type moves. I think now maybe that might become more pronounced too, just because there's this like short vol position on the upside where it's like if ETH starts moving dramatically, or if the supply dries up a little bit on the spot selling side for ETH, then might have to cover those positions again. So I guess it's interesting to see if that'll play out.
Yeah, we saw that all last year, right? All the XRP news, all the spontaneous events. He would spend whatever to cover. He didn't care. He would just cover as much as he could.
Yeah.
Right.
Cool. I think that's all I have for now.
All right. Awesome. I guess we'll just kind of quickly go into the flows that we've seen. So, I mean, obviously, the post-ETF, sell the news that we saw. We've seen spot and vols reset quite dramatically. Spot down to 42K, and a lot of the curve kind of back into the 40s right now. And I would say on Paradigm, I mean, Josh, you've certainly seen these big call spread trades. Obviously, the Ethereum ones have certainly been a bit bigger, but it's certainly occurring in Bitcoin as well. So if you take a look, the biggest trades, Feb in March, 50, 60 call spreads in total, over 2,000 times, not massive, as well as, the Feb 65, 75 trading 1,000 times. I would say that post ETF, the market has been a little bit more on the quieter side. Tends to happen, as spots kind of comes down and vols reset and the air is kind of taken out of the market. But I think what's kind of interesting is when it was a couple weeks before the announcement, Greg and I were commenting. There was this one day that we had like a pretty significant sell-off in Bitcoin, down like 6%. And if you kind of look, and this was of course ahead of the ETF announcement, and if you looked at the skew across the curve, 25 delta skew was still like dramatically calls over puts. Mm-hmm. But now we're kind of in a world, since we're past that ETF, where a lot of kind of that spot vol correlation, at least in the front end, is starting to flip a little bit. I mean, if you look at that chart in the bottom right corner, you'll see that the green means that it's positive. Puts are trading over calls. But what is interesting is, where does it flip the calls over puts again? Well, kind of right in that March-June bucket, which is going to be the buckets that are capturing the halving. I think even Deribit is pushing forward the release of the April expiry due to the demand for optionality. So I think in terms of catalyst, people are kind of looking to this as kind of the next big one. But hopefully there is something sooner, so it isn't just kind of a grind over the next couple months or so. But yeah, that's kind of what I have on the flows. I mean, Josh, you guys kind of see anything interesting on the flow side? I know we already covered the overrider.
Yeah, I don't know. I mean, I kind of think I saw this morning I think it was like March, April to June was maybe like 4 or 5 vols. Maybe that can steep it up a little bit more, because there's a couple catalysts there between March and June. I'm sure you guys remember when this was like in December, when people were trading like the Ds versus Jan, because the Jan had the ETF catalyst, got priced way up. I think it was like 10, 12 vols over. Maybe there's some steepening there that could go, especially now that there's like this this override supply. But yeah, I mean, overall, it's like this reset is nice. This vol reset, like I think it gives a lot of people who want to go long vol the opportunity to get back in. And I know when vols were like super jacked going to the ETF, it turned a lot of people off on being able to trade options for directional views, and hence you get all these like call spreads and things like that trading that are more vol neutral. So yeah, I think it'll be healthy for the market.
Cool. That makes sense. I mean, we're coming up on 35 minutes. There is something that I do want to cover as well. So in terms of, options on this ETF, right, that are inevitably going to get listed. Like, have you heard anything on time frame? I remember back from my days, whenever, a new instrument started trading, it was usually like 4 to 6 weeks it would take before the options started to get listed. Do you have any insight when you think they're going to come? No.
Your guess is as good as mine. Yeah.
Yeah. Okay, fine.
I think someone mentioned that the CFTC or so, like some regulator has to approve this because it's more of like a commodity type of product, even though it's an equity ETF. Yeah, I don't know. So there might be some additional approvals required.
Right. So in terms of like kind of the emergence of this IBIT option markets, I mean, look, from an onshore US perspective, finally people are going to be able to get leverage to this asset class in, a way that is hopefully, I guess not too capital intensive, right? Now these guys are going to be able to punt into these, zero DTE, IBIT options and things like that. So I would imagine retail's going to be a pretty big participant in this. Do you imagine like banks are going to get involved, or do you think it's going to kind of be like the prop market makers that are going to be the ones that are kind of dominating this and providing liquidity?
I think, yeah, this is a huge boon for a lot of the smaller prop shops or the Chicago type shops, the HFT type firms. The guys are doing like the payment for order flow type of stuff. Yeah, I think it'll create a lot more opportunities. Like I think we're more focused on just the underlying commodity market for Bitcoin. But yeah, there's gonna be a lot of good opportunities, I think, across everything. And that's the key, is just having access to everything, right?
Yeah, right. No, exactly. I mean, that's kind of why the opportunities exist in the first place, is because most people can't access all the ecosystems. I mean, going back to your first point in the conversation, right? So yeah, sure. That makes sense. Marty, Greg, any closing comments before we close this one down?
That's it for me, guys. Everything was great.
Yeah. Thank you so much.
Yes, and thanks for having me on.